up guys, welcome to another one of my videos. I hope that you are doing well, and without wasting any further time, let's get on with the video. Pretty happy to mention that our gold trade has beautifully played out as expected. Unlike sterling, as you remember, I briefly mentioned in one of my posts and in my last video, how I was personally looking for new highs to be made. And whether that was a valid loss or not, it's entirely dependent on one's own personal views, right? I've had my own reasons, my own expectations that triggered me so much to avoid, to pretty much neglect any current market conditions. Sorry, any current market condition price action, which were bearish all the time. I mean, it was pretty straightforward. You can see how we had a shift right here that took place. I mean, I in hindsight, it's always beautiful. You can see how that's a very corrective price nature in the first place, followed up with this area that price just couldn't go through in the first place. We had first tap on the Wednesday the 10th, followed up again, and again. Look at this. That candle alone should be a sign to short it straight away. Sorry guys, I'm still recovering from fever, 2 days, and eventually dropped. Anyway, apart from that, gold played out beautifully from the region that I was interested in. I was personally interested in looking for a deeper pullback, as I said, into 450. That was a really good level that I was looking to short from. Of course, I don't mean that price has to pinpoint that level, tap, and then drop. I mean, as long as it could go anywhere near it or above it, or at least very close to the level itself, and then, we'll be looking for shorts straight away. But what happened was price tapped the level, followed up with a massive engulfing straight off. The trade was taken during London session, a session that I personally do not trade. But on the other hand, I wasn't going to miss such a beautiful trade that I personally was looking out for since the start of the week. That's what price was on a Monday. Pushed back up into the level, followed up with a massive drop. As much as I wanted to have an entry, a limit order, I did mention that you can have one if you wanted to. The risk reward did not make sense, did not make more sense compared to taking a trade perhaps slightly deeper into the level, followed with a confirmation. I got far better of a risk reward of, so sorry guys, I just happened to hide this for, I like to clean my charts clean. So 1 to 15, right? 1 to 15 compared to, if you go back into my previous videos, a level, sorry, if you go into my previous video, I did mention that if you like to take a short, a limit order, that was going to give you, I believe, a 1, 2, 3, I think it was, just under 1 to 4, I believe, something around that. A 1 to 3 if you go with that, and 3, 750, oh, I did beautifully, yeah, around here, so 1 to 3.5, which is up to you if you want to go with that. Coming into this week price expectation, what you're going to understand is that it's all relative to how you look at the market. I personally look at it from an intra-week to short-term market projection. I don't look at it from a day-to-day perspective. That being said, sorry guys, I'm still recovering, as I mentioned. That being said, market conditions are not gonna change very often, right? It will take time. So therefore, expectation remains the same, looking to keep capitalizing on the shorts up until price reaches my projected target. That is not where it should be. So that would be 3750. I forgot to. That's exactly. Hold up. 3750. I want to 10 hour, and I get to that in a moment. I personally don't trade on a Monday, but the confluence aligns so beautifully that I wanted to take the trade in the first place. And what happened was, sorry, before I get to that in the first place, so what I mentioned was my bias will remain the same until the 3750 level is being mitigated, or at least this general level of 3818 is mitigated. My bias remains unchanged. But as soon as the level mitigates the 4072, any shorts to the downside can and will be more aggressive because it's the daily level, right? So from here, after that, price can be dropping either aggressively, or we could expect a pullback, which I do not believe it will happen until this is taken. But you have to take into consideration the fact that price can and will be aggressive. For you to take any shorts to the downside after these levels been mitigated will be definitely aggressive. Coming into today's session, what happened was price beautifully showed up at the market open. So Sunday, Friday close, you close anywhere around that level, shot up on a Monday, beautiful, back into the previous low of the day on the hourly. It kept rejecting the 4.2 psychological level for quite a while, right? We had one tap, stepped back into it, broke above it, came back straight in, and I personally was looking for an engulfing to be printed on the 4 hour, which was 80 minutes ago, which it didn't, to confirm that it was actually ready to drop. But looking at the hourly, I mean, I'm pretty happy to have taken the trade. It was very well planned after that engulfing was printed. So well, let's see how that plays out, which doesn't really look that good. Well, but that's why I don't trade on a Monday in the first place. But as I said, my target projections and my bias remains unchanged. So the what can still happen is price can take out this high to then come back, and if it does take out this low for 170, we will be confirmed. It will be your confirmation to start looking for shorts in the first place. That entry was an aggressive entry itself, but I'll see how that goes in the first place. My stop loss is being placed beautifully above the order block, where we rejected it quite a few times already. And let's just see how that goes. Looking at the 30 minutes, nothing much to have said. So if we can reject close below the 4200, below this low, that could be a beautiful short to take place again. But we still have the entire week, no rush, and I'll see you in the next one.